All right, so let's talk about the fake breakout setups. This is such an important thing to know, and it will make you and save you thousands of dollars. So let's talk about it. A fake breakout is literally whenever there is a breakout in any sort. It could be a horizontal line breakout, it could be a vertical line breakout, but any breakout where more and more people can see very, very clearly. And that's the key part. So whenever there's a clear breakout setup and the stock breaks out, but then it fails to continue, it caused a massive, massive sell off. So notice here, here's an example. Look how clear of a breakout there was. There's a breakout happen. And notice here this green candle. What this shows, there is a breakout of it with a very strong green candle. Now this means, including me, I would enter right here. If I'm already not in here, I will enter. Notice here there's first of all, there's a gap fill. The gap fill of the stock, and then the stock breaks out. Now, two things could happen. Either it breaks out and stays above and then continues and goes massive, or it comes down. Two things will happen, right? Now, a lot of people who enter here, because it's such a clear setup, lots of buyers get in. But for some reason it fails. It could be because there's a bad news on the stock, or the stock is not really, a company is not really a good company, like a company who's not really in profit right now. So there's not really reason for lots of other traders to get in. So this gives other people who are already holding stock to sell, because there's a huge buying pressure, so they can sell whatever the price they want here. But whatever the case is, if the stock does not break out and stays and it comes back inside of the trend, it causes a huge sell-off, because everybody who got in, they're like, oh, I got in because of the breakout, but the breakout is not there anymore. And what happens? Look, fail. So anybody people who don't know especially, if you cannot see this breakout, let's say that you are entered here and the stock is going up and you're like, wow, great, and you don't know anything about this failed breakout, and the stock comes back down and you're like, oh, that's fine, you know what, don't worry about it, it's gonna come back again, go back up again, right? And look what happens, it failed, and you're like, oh my god, I have no idea what happened. Well, because it was a fake breakout. And whenever there's a fake breakout, a lot of people who entered here, they realize, oh, you know what, I entered but it's failing out, I'm gonna get out and cut my loss. And that caused a selling pressure, which caused selling pressure. A lot of people who entered here, they're like, oh my god, I thought I was going up, but it's not going up anymore, I want to sell too. So lots of sellers combine at the same time, which caused a huge sell-off. Okay, so fake breakout, extremely important to realize this fake breakout, because if you're already in the stock, you can sell it, or if you got in here, you can still sell it and get out before you are like down 50-60%. Okay, extremely important. So let's look at a few more examples. Again, psychology. This module is all about psychology, understanding what's happening between buyers and sellers. So this is a daily chart of Bitcoin, where each candle represents daily chart. Notice here there's a clean trend breakout. It's like a trend, or you can say a pattern, which we're gonna discuss pattern later. But basically there's like a pattern, triangle pattern forming. Okay, and there's a breakout right here, and then once the stock breakouts, continues to go up. Correct? Very simple. So a lot of people who got in, it's working perfectly, great, awesome. And then there's another trend breakout. So a lot of people enter right here, right? If success breakout, people enter here. Then there is another breakout, which is more like a horizontal breakout, right? Like a straight line breakout. Okay. And then notice here, it bounces even on the trend, on the line, and it bounces up again, which means that it's looking like it's gonna go up, continue. Okay, so a lot of people who enter right here, they're all there, and all of a sudden next day, boom, it's down. Then it's down. It's down. Okay, so all the people who enter right here thinking it's a breakout, all the breakout traders, they enter here and they're like, oh no, it's not working anymore. So it's a failed breakout. And once it's a failed breakout, what happens? It comes down, it tests this area again. Now the same area which was support becomes resistance. We learned in the first module, first class, support, basic rule of support resistance. Once the resistance breaks, it becomes support, which is becoming support. But once the support breaks, the same area becomes resistance. Notice here, it became resistance right here. Now this is having hard time troubling, and boom, there is a huge, massive sell-off, and actually went down to like 13,000 before it went back up. So from 60,000 to 13,000 only because of this failed breakout. So before. So it's not like A lot of people are like, oh my god, I had no idea that it would go down this much. Well, actually, this was clear sign um, that there's a failed breakout, and once there's a failed breakout, boom, the stock crashed right after. So you have a lot of time to realize that part. Okay, so if there's a fake breakout and then boom, stock crashes after. Okay, the price, not really the stock. It could be in any, like it could be Bitcoin, it could be stocks, it could be any price, anywhere where there's buyers and sellers coming in, it causes it. Okay, so let's look at another one, Neo. Right here, there's a nice breakout, boom, the stock goes up. Okay, there's another breakout, and look what happened here. I actually alerted this right here when this happened. I alerted a lot of my people who are in Discord. I alerted them, hey guys, Neo is failing. I even made a video on it. So if you go to my YouTube channel, you'll see a video where I made a video. I'm like, guys, be careful, Neo is gonna crash. And that's exactly what happened right here. As soon as there's a breakout right here, I even entered right here, and then when it failed, I got out here. I took a small loss, and right now it's like $3-4. It's like $4. It went from 65 to 4 straight down. Insane. Okay, and it's extremely important to realize. The main key point is that the trend has to be as clean as possible. And then also, if it shows that, okay, it's staying above, notice here how it's clearly bouncing above this on this trend line. It's showing people, hey, you know what, this looks like this is it's acting as support. It's a good time to enter. But then basically it's just a fake out. It's basically it's a trap. People call it trap. Okay, so it's a trap. A lot of market makers do it. They just move the price up, get all the buyers come in, and then take all their shares. So it's a very common practice. So extremely important to understand that. All right, so the fake breakout, stock crashes. Let's look at another one, RIOT right here. So notice here, very clean breakout, and then this green candle, this is the telltale sign. This green candle, notice here, this means the stock came down and bought right back up. This is a buyer's candle. We talked about this green candle, right? It's a very strong candle, and it broke out this trend. So a lot of people think, oh, it's a strong candle, buying support, buying action happening, and then it broke out this trend. So let me buy right here. They buy, and then boom, they get caught, and then everybody sell off, and then it just goes down. So extremely important to understand this fake breakout. Whenever you see a fake breakout, high chance the stock is going to crash after, but it has to be as clean breakout as possible. The cleaner the breakout it is, the better is going to work on the more it's going to crash, because the more clean it is, the more buyers see it, the more people see it, the more people get in, and when it crashes or when it fails the breakout, all of those people who get out, or a lot of people who get out, or they panic and then they hit sell button and cause a massive crash. Let's look one more. I just want you to see as many examples as possible so that when you go in, you can actually go through and look at the chart, see where it happened, how you could have predicted it. Okay. So notice here one more, Lazar, LAZR. Another thing is that these companies are actually not really that good of a company. They're like new startups, which is also helps a lot in the failed breakouts. If the company is really good, for example, Amazon, Nvidia, and there's a nice pattern breakout, most likely is going to work. But if the company is a fail, like not a profitable company, and there's a breakout, and that if then causes a fail breakout right there like this, boom, look at it. As soon as a fail breakout, and then once it comes back down, it doesn't come back and then crash. Okay. And usually the stock goes down a lot, like probably 50-60%, even more, and then stays there for a very long time until the company shows some profitability signs. So yeah, and I think that's about it. So the key takeaways are understanding that the cleaner the setup, okay, the cleaner the setup, the higher, and then it's a fake breakout, the higher chance of the stock crashing. So now, obviously, once you understand this, you can get out of the stock as quick as possible. If you're already in it, you can also short the stock and make money while the stock is going down, right? And be on the right side, and also know what's going on, and not just holding the stock and hoping that it's going to work, right? So understanding these key technical analysis, understanding what's happening with buyers and sellers, and the psychology of buyers and sellers is extremely important. All right. We'll see you in the next video.